So now that hopefully you have a rough idea of what an Iron Condor is and our basic rules for setting them up, let's get into our first Iron Condor. And this is our bread and butter Iron Condor because this is the one we're going to use more than any other one. This is called 1/3 the width of the strikes Iron Condors. And I'm going to list the rules at the beginning of every section, then I'm going to give you the visuals and obviously how to set them up. So we'll start with the rules even if they don't make sense. Don't worry, I'm going to explain them moving forward. So, number one rule when we're doing Iron Condors is we always prefer to have a minimum $2 width on each vertical because of commission costs. Trading costs money. They charge you every time you buy or sell something. So if you only do a $1 wide Iron Condor, because you're actually selling two verticals at the same time, you have two sets of commission costs when you open it and two sets of commission costs when you close it. Verticals on both sides. So that gets expensive. A dollar wide Iron Condor is just not going to be able to make enough money to cover those costs. So we always prefer to start with at least $2 width on each vertical of the Iron Condor. Then our rule, what are we looking for? Well, we're looking to receive anywhere from 33 to 40 cents credit per dollar width of strikes. Don't worry, I'll explain this, which means because we're starting with a $2 width minimum, you're just going to double those numbers, and it's going to be between 66 and 80 cents total credit received if we do a $2 wide Iron Condor. The way we manage this thing is we're going to manage this at 25 to 50% of the max winner. Again, don't worry, I'll explain this moving forward. And again, when to use this, we can use this anytime. This is going to be our bread and butter Iron Condor. This is our fallback. If we're trying to figure out what we want to do and we don't know which Iron Condor to use or don't have a preference, this is our fallback every single time. The 1/3 width of the strikes Iron Condor is our bread and butter Iron Condor. So here's what 1/3 the width of the strikes looks like. And this chart here, I want you to be aware, this is a POP chart, not a dollar chart. And what I mean by that is, all I'm telling you is what's my probability of profit. Remember, what's my chance of making at least $1 profit on this trade? So when I do a 1/3 width of the strikes Iron Condor, what that means is I have a 68, roughly, obviously it's going to change slightly when you set it up, but what we're shooting for is a roughly 68% POP, a 68% chance of making money on this trade every time, which means there's a 32% chance of losing money, 16% on each side. That's how we're going to set this up. Again, don't worry, we're going to do this in real time on live platforms as well, so you can really see what I mean when I talk about this. But just for understanding purposes, all we're talking about here on this chart is here's your profit potential area, and you can see how big it is, which means there's a 68% chance of making money on this trade. This red area is where you're going to lose money, and that's going to be 32% of the time. That's all you need to kind of gather from this visual. Just a quick visual of like where my profit potential is and how wide that area is compared to my losing potential. And here's what it looks like on the chart. And all this is meant to show you is that when we do a 1/3 width of the strike Iron Condor, all we're doing is we're centering the stock price between our verticals. So in this example, here's the stock price right here, 221.11. And when we set up this 1/3 with the strike Iron Condor in this example, you can see right here, here's where we want the stock to be above, here's where we want the stock to be below. So anything below this blue line, anything above this blue line means we're a winner. And right now the stock is right in the middle. So when we set up a 1/3 strike Iron Condor, this is what we're looking to do. Basically center the stock price between our two verticals. That's what it looks like visually.